Hey YouTube, this is Zach with Achilles Financial. Today I'm going to be walking through two different trades that I made this past week utilizing a option strategy called legging it, which is what I like to use when the market is as volatile as it is right now. This is something that I talk about very often in the Discord, which is linked in the description down below. It's free to join, and we talk about stocks as well as I list all of the trades that I am making. So first and foremost, as you can see what I have here on the screen, leveraging the Thinkorswim web platform from TD Ameritrade, is Tesla. Tesla is a stock that is known for its volatility, and as such, its options prices tend to be incredibly expensive. You can see that this put right here, which is what was purchased this past week, cost a whopping $1,720. What I want to highlight is that TD Ameritrade Thinkorswim does showcase the profit loss potential during the entire time you have this open. So you can see that if the option were to expire today, then I would not benefit from that whatsoever due to the fact that I am not close to being in the money, which is $800 strike price. So what does this mean? Well, as we were seeing some of the volatility, we saw these very large drops, making these premiums very, very expensive. However, on Friday morning, January 28th, you saw that Tesla had this huge rise up. Now, what I did is I purchased a put at that point in time for $810 a share, and those are going to be expiring this Friday, February 4th. So you can see the cost associated with that over here on the right-hand side and the current liquidity. However, you can see that when I add in that second option right here, that the only way I lose on or rather my worst case scenario here is a $150 profit. And the way that occurred is, as you can see by unclicking these, that if we look at just the past day, which I can change to here, and we'll change that to a 5-minute candle, you can see that as it dropped early on in the day, options premiums will get very, very expensive. So when it got up here and I saw that it did not hit or did not break through this a second time, I purchased a put right about here around the 850. Now, I'm by no means a technical analysis person, and I definitely could have been burned on this. However, tech has been getting punished lately, and as such, I thought that Tesla still had a ways to go down. So what I did is I purchased that $810 put. Then, as throughout the rest of the day, Tesla price started to decline. The price of the $800 put at one point in time was actually a higher price to sell than the $810 put that I had purchased earlier in the day. As you can see, then I was able to sell that put for more than I purchased it, meaning all in, I was actually paid to hold this option. Total of about $150 with 65 cents on either side of that option to be able to lock those in. So that's why that cost is $148.67. So while I limit my upside if Tesla is to go down, I still have the potential to have a $1,000 still on the table of potential profit should it end up below 800 or 700 and we'll call it $98 a share on the strike price expiration date, which is going to be $800 a share this Friday. So my worst case scenario is an $850 profit. My best case scenario is an $1,150 profit. So if you think that this is a strategy that makes sense for you, I highly recommend it because it limits your exposure and it lets you keep that cash balance strong at the same period of time. Again, I still have that original $2,000 plus the $150 that I got for selling that second option. So this is a very expensive way to do this. However, I made the exact same play or the approach on AMD. So you can see right here that yes, AMD did have a very strong Friday, as a lot of stocks did. And you can see that this is something that I locked in, similar approach, $99, $98 strike price, similar exact time frame. However, for each one of these contracts, you can see it only cost less than $300 as opposed to the $2,000 for those Tesla contracts. Similar thing, the stock, if it goes down, I have maximum gains of $281 a share. If it stays here, I have maximum gains of $81 a share. And you can do this both to the put and the call side, and it's something to consider and add to your trading arsenal going forward as we expect to continue to experience heavy volatility. So if you have any questions on the concept of legging it, let me know in the comment section down below, or feel free to join the Discord and ask away. Thanks for watching. Talk to you later.